Well, hi there. Welcome to my YouTube channel. Today, yesterday's video, what I showed was I was showing a setup that happens quite often and really quite predictable. Sometimes you just don't see that setup, and like a lot of people, sometimes you have to have more than one strategy in your playbook, especially if you have a desire to trade every day and that sort of thing. So sometimes what I do is I go with what's called the momentum trade, and all that means is I'm trying to trade with the momentum that the market's going in. And a lot of people have trouble charting. And what I mean by charting is actually just like what we did yesterday, picking out and selecting items out of the chart and in essence putting together your strategy from charting. So a lot of people they'll use these indicators, and so, two indicators that I like to use when I'm doing momentum trading is this supply and demand visible range by Lux Algo, and and it's free to use on TradingView, and also, and this is just so you understand this, the main window for this TradingView is there's two different windows here. There's an upper and a lower area. In the lower area, in this particular situation, trying to do this momentum, is I use this commodity channel index. So I have both of these indicators on. And, when you're checking out a new indicator, one of the ways you use to figure out, like, how does it work or how would you utilize it is you look at more than one together and you see if they complement each other as far as giving you confirmation. So right now, I want you to focus on this area. I'll shade it. This area right in here. And if I get this thing to cooperate, hold on here. Well, I guess that's all it wants to do. Anyhow, but this area right here, let me go ahead and delete that just so, but that's the area I want you to look at. So when you're looking at like from this candle, which is coming up off of this, now let me explain these indicators. This top one is showing you two zones, a supply zone that's at the top and demand zone on the bottom. Um, that's what they call them. It's just easiest. Again, when you're looking at two different zonal ranges, supplies on the top, demands on the bottom, and and these zones will act like a trampoline or an area that your price action typically will bounce off of. Doesn't always. Sometimes it'll break through and it reestablishes a new demand zone or a new supply zone. But typically, as you'll see here, it will. It almost it's like it respects it and honors those zones. But let's look at this area right here, like I was saying. So now take our view down here to this CCI indicator, and all right, if you line them up, if you look at right here, uh, like this candle there. Well, hold on. When you line them up, what you're looking at is uh, as your price actions are starting to go up, look at what's happening. Your blue line is above your yellow line, and it's also above this channel. So it looks like, in other words, if you're looking at this and you think, well, how can I use this? Think of this like a secondary confirmation of it's time to get into the trade. Because look right here, what's happening is that this price action is starting to come up off of this demand zone, right? Same time that this is breaking out of that channel, and it's right along on top of here. So if I were following this live, I would probably look to trade until I would get into it here or somewhere around there. And when I saw this starting to turn, that's where I would get out of it. So what does that mean to you money wise? What does that equate to? Excuse me. So let's make this simple here. Now I'm going to close this up just so you can have a little better visibility. But if I got in here, that would have been right there. And if I got out here, that would be up here. So I'm going to use my price action tool, and I'm going to calculate what that would be. So that's showing me a $3.90 price differential from the price of the stock. And you may recall I have a spreadsheet that I like to use, and that was what, $3.90, I believe. So I plug in that number, and then we go over this again for those who don't remember or missed the other videos. Your delta that's an item that the brokerage house establishes when they set up the blockchain for doing an option, and this number varies, but it averages zero point 0.5. So I just use 0.5 rule of thumb. So these numbers aren't exact; they're just a good approximation. The next is the price move. Then it's the gain per share. And what am I doing here? I'm taking this delta and I'm multiplying it by the price change. And that's what that delta is. That's what it represents. It's telling you how much the contract price is going to change based on the change of the stock price movement. So for basically to sum it up, every dollar increase in the stock price, you're going to get a 50-cent increase in the option price per share, keeping in mind there's 100 shares in each contract. So with this $3.90 price change, you'd have gotten $1.95 increase per share. Now what I do here, if you look up here, I'm taking this cell, this C2, and I'm multiplying it by 100. Why 100? Because there's 100 shares in each contract. So for one contract, if I'd have been trading one contract on that simple move that we just looked at on the price on the chart, again, let's look at it here so you understand what I'm talking about. This little bit of action right there, if you'd have done one contract, you would have made $195. If you had 10 contracts, you would have made $1,950. You know, what would it be if you had 20? Okay, maybe 40. So the same price action on the stock, and you can increase or scale the amount of gain you make by scaling the number of contracts. The number of contracts you're able to use is based on your buying power. So the larger your brokerage account is, the more you're able to scale up the number of contracts, and you can make really, really good money. So I'll put that back to 10, and I hit save just to hold that there. All right, so let's go back to our scenario. So say I'm in a trading day and I bought and sold that. Well, that was this little action right here. All right, and well, actually, you know what? I got to take that back. I got ahead of myself because there's like three little moves right here that you could have made trading wise. And if you're following along, if you're using this bottom indicator as a confirmation, let me go back. Maybe I did have it right to begin with. Sometimes it's hard to talk and look at this thing. It's kind of like chewing gum and walking at the same time, right? And there we go. Now, there's actually, give me just a second here. I'm looking for something. I don't understand why I'm not getting, oh, here it is. Yeah, cross. Well, it's not showing up. Why is that? That's interesting. Um, I'll star that thing. Let me see what I get now. Ah, there we go. No, it's not doing it. I don't know. Might be the time frame. I don't know. Anyways, whatever. But again, okay, so it would have been $1.76 on the first one, and then let me delete that. So then I would have gotten back into it again here. So let me grab my price action tool. So I would have gotten into it here. and I would have traded it right to about there. Okay, so you see how you can use these two indicators together. Now this next one would have been really sweet. Is it this show, and see, this is where your candle may not agree with what you're seeing down here, but again, this is kind of giving you an indication of, because sometimes these candle colors will what they're doing is they're grabbing up some liquidity so they can turn around and run, and that's exactly what happened right there. So talk about making some money on this one little action on this indicator here. You would have been looking at something like that. That's $11.14. So let's take a look. Yeah, I'm back here, brother. Making a video. Oh, I'm making a video. Yeah, see ya. So yeah, so on that price action, $11.14. Jerry's a badass. That's my buddy Rick. Yeah, one contract would have been $557.10. You would have made $5,500. And again, going back to this one, basically, well, two candles. I mean, that's some sweet action. And what are you using? You're using two indicators to help you decide when to get in and when to get out. Now, why would I have gotten out on this candle here? Well, I would have seen, looked down here and saw, well, hey, that's starting to head down. It's time to get out. So maybe I wouldn't have been exactly there. Maybe the price action would have been more in line with, yeah, this thing is not giving me what I want. Say like that. Maybe not as much, but you know what I'm saying? It gives you an idea of when I would have gotten in and out. And again, this is how you can use these tools. You can use this technology to help you. Looking over here, look, you got the same thing going on here. Is you had price action starting to climb up here, and it correlates right here. Now I probably would have gotten out there and wish I'd have stayed in longer, but that's okay. And what would that mean dollar wise? Just to give you an idea, is let's see, yeah, we would have been, looks a little over $4 price change. These tools will make you some money. You just got to practice. And what's great with these charts is just like this here. Let me go ahead and delete that. Now, if you ever want to clean off your chart, that's what you do. You just use your trash can. But look up and down this bottom indicator, and it's showing you all kinds of areas where you could have made some money off of some good price action on the stocks. I mean, like, look at this one here. What we've been looking at profit wise or gain, however you want to look at it. I mean, look how beautiful that is. $9.46. You'd have been singing all the way to the bank. Look at that, and with just 10 contracts, which isn't a lot. A lot of people, if they're big time trading, they're trading 60, 50, 100, whatever contracts at a time. Um, let's say you did 30. I mean, look, that's the kind of money you can make in a relatively very short period of time. Do you always make it? No. Does it sometimes turn around on you? Yes. And when it does, you get out. You know, just like this indicator here shows, it doesn't stay up forever. Now it's starting to go back down. And if you're paying attention to it, it'll tell you when to get in and when to get out. So there you go. Hope that helps you. Uh, this is one way of using the supply and demand zones. And hopefully you find that helpful. And I'll talk with you soon. Take care.